Hello and welcome to Using Options as a Stock Investor. My name is James Boyd. We welcome all of you here today. We want to talk about today growing the capital, and we'll talk about that here today as we talk about stock and option examples. We got Michael Fairborn in the chat. We welcome him, and we welcome all of you, such as Bob, Art, Barat, Eva, Jeff, Elena, David, and many others. Welcome to all. Just real quick as we hop right in. Remember, when we talk about options here today, the options that we cover would be like covered calls, cash secured puts. It would also be verticals. Okay, so those you want to get very comfortable with those. We also might talk about from time to time like callers and synthetics. Those are really the main strategies that we really cover. So we're a stock investor. By the way, that could include maybe products like ETFs as well. You're probably thinking that it could. And you're thinking, how can I use options as a way to provide income potentially and protection? Okay. Now, some of you might like to speculate on direction. I couldn't imagine that. Joking. That would be the third point as well. So that's how we're going to use options to try to complement that portfolio. Now, remember that this webcast discusses technical analysis, but there's other approaches like fundamental analysis, may assert some different views. Okay. Also remember that that class is done Wednesday at 4 p.m. Eastern. We'll be starting that 8-week rotation over again tomorrow. Check it out. Remember that all investing involves risk, including loss of principal. And this is a very important point. If you don't risk anything, you can't really make anything. Okay. So there's risk in everything. Okay. And also remember that the past performance of any security or strategy does not guarantee future results of success. Trends not guaranteed to continue. Now, in our session, we always talk about market, sector, and portfolio updates. We have two portfolios that we've been managing since November 15th. We'll talk about how we're actually doing after that drop from last week. Second, we'll also go over existing positions. We have expiration week this week. Are there any positions that we need to kind of care about? Is there anything that could be done with such short-term time left? And then we'll talk about some new positions. Now, yesterday we talked about diagonal resistance breakouts and the potential start of bull flags. We'll kind of maybe take that a little further and look for some new examples here today. So first off, let's take a quick peek. So I want to bring up let's start with just real quick the NASDAQ. Okay. Now, if we take a look at the NASDAQ, and I'm going to pull this up, kind of full-size chart here, if you don't mind. I'm going to zoom in on this. Now, we've kind of been talking about this theme of diagonal resistance, and if we draw a diagonal line down from the very tippy top, touching the most number of tops as possible. Remember, we said yesterday, this is the second time we've really seen the price get above the diagonal line. What's the difference between this and what's the difference between where we are now? Well, when I zoom in on this, the difference between what we saw here, the shorter term moving average went up, okay? Which sometimes can be a head fake, right? It's not confirmed. It's the most aggressive entry, okay? The shorter term moving average went up, yes. The difference is here's the 20-period moving average. It also went green. We haven't had that before. So you want to go back to about July 16th, okay, maybe even a little bit further. Well, let's go back a little bit further. When was the last time we actually saw both moving averages green? The answer was July 11th, okay? So this is not, we would say that, the 10-day moving average being kind of the more aggressive line, it's tracking the price more closely. The one that's kind of the smoothing mechanism, if you will, or confirmation line would be the 20-period moving average. And it's giving green. Now, we did see that when you look at the NASDAQ here today, it's getting a little help by Starbucks, okay? Starbucks up $17, 22%. The Chipotle CEO jumping ship, okay? Fleeing Chipotle and going over to Starbucks. So maybe how much of that bump was caused by Starbucks? That's a big jump. God, I feel bad for the Chipotle people, okay? Hopefully they don't hire the Starbucks CEO. I'm just saying, maybe it wouldn't be a great fit. Maybe it would be. Who knows? So when we talk about the NASDAQ, getting a better move here. S&P, same deal. 20-period moving average as I zoom in, both green. When you take a look at kind of where it's at, okay, want to kind of be mindful of this. We have the MES example from Friday, okay? Sadly, that futures class was not uploaded yet, and we're almost a week past. Unbelievable. Yeah, it's still not up. Okay. Now, if you take a look at this, what's interesting about this is here's the gap down from Friday. Let me go back and double check. 7, let's see, 6, 6. Here's Monday. Okay. So there's Monday. There's where people or some people chose to panic. Okay. Now, we're not saying there was no position stomped out. There was. We talked about those. There's the gap down on Monday. Since Monday's gap down, someone used that opportunity of volatility to buy into that panic. Price went all the way back up. Now, it's not just back up, but it's now right back up to this 54 and change level. Okay. That MES example was tightened in terms of the stop. I think that target there was, let me just double check. If you ever look at that, 54, let's kind of go back and just take a quick peek where that's at. If you watch futures overnight, and that one, let me just take a quick look where that's at. Okay, 54.50. So we're 25 points away, okay, from that target. Keep in mind that reward to risk stop adjustment there. It's getting a little closer. So the S&P is at a major level here. If it can actually get above this 54 and change, okay, this could go to the next level resistance, okay? I know this blows some people's minds, but you got to remember is when prices drop, some people do not do bearish positions. Some people use those drops as a way to get in. They might be in a 401k or something like that. Many are, millions, and they can't go short. So they try to use the drops and they dollar cost average over time. They get paycheck and they buy more. They get a paycheck and they buy more. Paycheck and buy more. That drop, they're just buying over time. They're funding their future retirement. Those drops are a way to try to get in at a lower price level on certain names. That's the key. Certain, not all. Now, Dow Jones, if you take a quick look at this, Dow is kind of lagging a little bit, okay? S&P and the NASDAQ look a little stronger, and when you take a look at yours truly, the Russell, where are you? Oh, it's nowhere near, okay? So here you're seeing kind of that more natural type movement. S&P leading, NASDAQ right there, Dow third, and probably the Russell fourth. Would like to see the Russell more participate. You do not have that 20-period moving average green there. So it's right now, it's, you know, a lot of people like this setup better. The S&P or the NASDAQ leading. Now, if you have the NASDAQ leading, that also probably tells you something about the VIX. Now, bring up just real quick, speaking of the VIX has sunk down to 19 and change. I'm sorry this looks so distorted, but when that VIX went up to 65, and you're going to see that I posted something just briefly on X, something you should know, we had the biggest 4-day crash on the VIX in the history, okay? The VIX fell over 47% from Monday to Friday, the largest 4-day decline in history. I know some of you are thinking, man, can I go back in time? You can't. That's why some people try to use that volatility to get in, okay? Keep in mind there. Now, I also want to kind of just take a quick look at what sectors are you watching? I already said one. Okay, number one would be, let's say, tech. We know if NASDAQ is going up, tech is probably helping. Notice right here the moving averages, same thing as the NASDAQ. Better movement on the technology. We brought up yesterday NVIDIA, okay? And you're going to see that that had a nice little pop here. The paper money portfolio will take every stinking bit of it, okay? The deck, we talked about Deckers yesterday, getting a little $9 pump to the upside. Decent little pump for that. What other one was actually filled? What other one did we buy yesterday that we could just take a quick peek at? Oh, that's right, First Solar. First Solar gets a little bump here today, about 6 points or so, who's watching. And you're going to see that if you take also a look at, let's say, healthcare, it's fighting its way back to the upside. Okay, a little bullish engulfing move back up into the area of resistance, like the nice strong candle some investors might say. When you get not a spinning top or a little doji, you want a candle that's the size of your arm. I'm joking, but maybe not. The biggest actually thing is you like a big fat candle smashing its way into resistance. So that way, maybe bears are thinking, geez, maybe I won't go bearish here. Okay. Maybe this could break out. Healthcare does look like it might try to go higher. Real estate. Okay. Pull that up if I can. No, that's real estate. I take a look at real estate. Staples holding in there a little bit. Okay. Not the greatest move, but sometimes that is okay if that real estate, the Staples is lagging a little bit, as long as the other areas are more bullish. Okay. So sometimes when you get strong moves up, you want to see the tech leading, discretionaries lagging somewhat. Kevin talked about that this morning. And when you look at Staples and utilities, they're up. They're just not up anywhere near that same percentage. Okay. Now, anything that we missed. Okay. So Comet came in finance. Well, let's kind of just take a quick look at, let's say, where are the financials? Financials, they're not up as much as maybe where the utilities were, or let's say the Staples were. Okay. They're okay. I wouldn't say there's anything standout on these. Okay. On that sector of financials, at least as of right now. Now, quickly, before we look at our examples here, the margin account, M for margin. Now, remember, we started on 11/15, okay? It started at 45K. When are we going to start the portfolio over again? I'd probably go just until the end of the year, so that way we could be on January 1st or 2nd, okay? January 1st, market's closed. We started here because this is when we started the new YouTube channel. That's why we started November 15th. We went up to 62,000, okay? And then all of a sudden, I took an unplanned time away, and the market fell pretty dramatically, and that portfolio fell down to 57K. And then that portfolio, as of this morning, is back at 60.5 K per 1,000. Now, when we look at the numbers, okay, since November 15th of last year, 34.4%, okay? Now, by the way, that S&P position from last Thursday did help some, $600, about 1%, just in that position alone. Off the high, though, okay, we were at the high of 62K. We're down still, okay, 2.5% from the high. Not like unrecoverable, okay, but it's down from the high still. When we look from November 15th, 34.4%. By the way, how much is the S&P up from that time? SPX, that's if you are fully invested, 19, okay, kind of take that out, 19%, okay, 19.95, okay, so that's your benchmark. That is really what you're saying. I'm trying to beat that, okay. So we're looking at what is the return of the margin account relative to the SPX. The only way you get the 19% on the SPX, you got to be fully invested. The margin account, the IRA, are not typically fully invested, okay? Partially, okay? So if we look at just briefly the IRA, we were at 185. We went to 242. It dropped all the way down to 220. It may have hurt our feelings. It did. And then it went up to 230 and change this morning. So we dropped 22 grand while I was gone. Okay. Now some positions got stomped out, and then we came back up 10 in a week. Okay. Now remember, I kind of said we're going to kind of get out of this hole with the spoon, a plastic spoon, and so far we kind of are. Now numbers wise, okay. When we look at, we're still 5%, okay, 5% off the high, but we're up since November 15th, about 24.3%. The basis for this portfolio is looking for relative strength and putting stocks and opposite positions on to try to ride the relative strength. Now, what I want to do is, again, we're comparing where's the portfolio at compared to the benchmark. They're still beating. And I want to now go to just real quick the paper money count and kind of look and see where these portfolios are in terms of cash levels. 44,000 of the 60 is still available. Interesting. I'm going to try to put more work there. Where we've really put a dent, okay, in the cash is in the IRA. 86,000 of the 230 is available. Now, some of that 86 could be actually tied up with current cash secured puts. Okay. So be noting that we might need some of that cash for the potential assignment risk. Okay. But there's definitely some capital here that we could actually put to work here in the margin account. Speaking of that, let's go back to, for example, just real quick, I want to go back to NVIDIA. Okay. And I want to take a look at this position. I'm going to go to the trade tab and I want to see, is there any position in the margin account for NVIDIA? Answer, no. Okay, there's not. And what we're going to do is, in this case, we're going to kind of draw some lines on this chart. Where do we think some levels of resistance are? Okay. Now, we did this trade yesterday and we had one before. One of those trades from before expires on Friday. It's up about $600-700, and then the new one just yesterday. Okay, but if we look at this, what you're going to see is got earnings upcoming. A lot of people, that scares some investors. Oh no, this earnings is upcoming. Some investors like to see that earnings upcoming because it gives investors something to kind of trade for. Okay, trade an expected move or volatility or something. Okay, what we're going to do is going to go to the trade tab. And we're going to go to the September expiration. And what we're going to do is we're going to look to, in this case, sell. Okay. We're going to sell the 110 strike or the 109. Now, I want to kind of look and see, is there any differences here? Okay. If we look at the 110, 65,000 contracts. Now, that was probably Amanda. Amanda probably did half those herself. Amanda, come clean now. Now, if we take a look at this, someone might say, I'm going to try to sell where we have a $5 bid-ask spread. You got a 5-cent bid-ask spread in 109. It just doesn't have, it only has 6,000 contracts. Okay. So we're going to sell the 110. Now, remember, if you sell the 110, that's closer to the current stock price with a higher delta, you're more bullish, or you're forecasting that stock might be have more upside potential. Okay. We're going to right click on that 110, sell, and we're going to go to vertical. Okay. Now, this is going to be your classic $5 wide vertical. Selling the 110, buying the 105. When we look at the credit there, $190. Okay. $5 spread, $190 max profit given the vertical, 310 max loss. So this is where some investors might say, hey, I want to kind of double check what we call return on risk. $190 potential versus 310 potential loss. And that comes out to be 61%. Now, there's probably only one way you're getting that high. A, you're going closer to the current price, which we are somewhat. But the only other way you could probably get that is, A, you might go farther out in time. We're not that far out in time. The only other way we're really squeezing that much out of here is that volatility is pretty daggum high. Okay? Now, it's not all about direction. It hurts me to say that. It is sometimes about volatility. The higher the volatility, the bigger the premiums. The bigger the premiums, the lower the break-evens. Okay? So we're going to, in the margin account, we're going to sell one of the NVIDIA right there. Okay? Any questions? Okay? Now, the comment says, what about the envelopes? Luke, my gosh, how did you remember about the envelopes? Okay, let's go to those envelopes. What is your point, Luke? And Luke says back, maybe it's too high. Let's go back and look. So we're going to go forward here, and let's take a peeky where we are. Now, what is this? Well, the blue line represents the 10-period moving average. Okay, fine. Now, what you're now going to notice is we're using envelopes. And the envelopes just kind of tell us how far are we on a percentage basis above the 10-period moving average. So if I said from the 10 to the yellow, how far is that? The yellow is 3% above the 10-period moving average, which means not really that much, okay? If we go to the red line, we're like at 5% above the 10-period moving. You get a strong bullish engulfing candle, etc., that might be the case. If you look at, let's say, what's the white line? Well, it's 7%. So if you're buying something 7% off the 10-period moving average, and you're setting your stop 2 to 3% below, that's the absolute maximum. Because remember, if we buy 5% above the 10-day moving average, and we set a stop 2% below, 5 plus 2 is 7%. That's called welcome to everyday trading. But if we're buying something like 12% above the 10-day moving average, setting the stop 2% below, what it says is your timing is absolutely, it's just horrible, okay? So when I look at this chart, it tells me that the timing is, it's a little elevated, but it's not horrible, okay? Now, why didn't we get in earlier this morning? Well, we didn't get in earlier this morning because we didn't have a class this morning, okay? We're doing it right now. Because someone have actually seen this earlier when it was only up $3. And someone posted about it on X, maybe. Probably, okay? Lucky you. Good thing you were on X, okay? Now, I didn't post on it, but there you go. So here we go. At least it's not on there. Now, so if we go back and take a look at this, okay? On NVIDIA, there you go. And Luke, I'm glad you brought that up because sometimes people get a little nervous when they see gaps to the upside. I want to go back to Meta for just a sec. Now, Meta has been one of those stocks that has just gone, well, it's gone bananas, okay? Now, this stock has gone up, down, up, down, up, down, all over. What kind of stands out about this stock is when you go back and look at where we were last Monday, and we said this before, there's a couple positions in the paper money portfolio that we have that you're going to notice that on Monday, we gapped down lower. Do you notice anything that's unusual? Look at where we gapped down to. Here's Friday. Here's Monday. Look at what happened with Monday. Yeah, we gapped down. Look at that intraday low, which you can't even really see it. I have to zoom in on it with a magnifying glass. The open was pretty much low, and the stock closes higher at the end of the day from the open. So number one I take away from this is the gap down. Somebody used that the opportunity to buy. Who on earth buys on gap downs? Okay, and that open is pretty much the low. That's a strong bullish signal. Okay, gaps up the very next morning, just to add insult to injury. And then it goes down for a day at the middle of the green candle. And I've said that 100 times. Don't even say I haven't said that. I have. When it only goes down to the middle of the large green candle and it goes doink, gaps up the very next day, the shallower it pulls back in percent. The shorter it pulls back in duration. You can say it now. It's okay. I want you to. This is a strong signal. Okay. And then the very next day, cold. It goes down for one day. And guess what it does? Gaps up again, and then close or trades above the close of the close above the high of the low day. I'm going to tell you right now, I don't care if you've been investing for 20 years, 25 years. If you're not getting comfortable with these 1 or 2 days down and then push back to the upside, it stinks. Because what happens is you're missing the opportunity for momentum and trend. You're missing it. Now, Mike and I have talked about this. We've been doing this for a couple days / weeks, plural, okay? We struggled with it. If we struggled with it historically, we know that you might struggle with it. So we understand, okay? This is not something we're used to. We're just so used to, like, we want the price to fall down. We want to get a deal, things like that. We're retail minded. But when you get really a strong trend of momentum, you're not looking for price deep price declines. You're looking for it to show price momentum, which means price stays above the 10-period moving average, price falls down less than 3 days, and then fires back to the upside. Okay? I'm telling you, if you could just say, okay, I've struggled with that in the past, like James and Mike talked about, and now I'm learning from that. Oh, man, you just fast forward, you're learning so much, okay? Do not be fearful that, oh, the price is high. You'd rather have the price high than low, okay? Now, I'm going to go back to this trade tab. Now, the current position that is in the margin account, there's 3 days remaining, Okay. And this might be absolutely foolish to leave this on. Okay. Why? Well, because in this position, it's sitting here pretty much near 100% or 100% right now. What we're going to do is we're going to take this, and it says in the money. Now, wait, is this good or bad? Well, if this was puts, this wouldn't be great. Okay. This is calls. So if it's ITM in the money, that means the stock is above the strikes. Okay. And it's a long call vertical, meaning the 490 strike. Okay. You bought that and you sold the 500. So what do you want? You wanted the stock to be above both strikes. Okay. First thing we're going to do is we're going to say, thank you very much. And we're going to take that money off the table. We're not going to wait the remaining 3 days and maybe have the stock crash on us. We're going to try to get out and try to harvest that gain right there. Okay, now that's the credit. You got to remember we got in for a debit. We don't make all of that because we paid something to get in. Confirm and send. Now you might be wondering, well, how much did we pay? Well, $29.65 less, $24.80. That's what we paid. Okay, that's the debit. That's the credit. We're going to try to make the difference less the commission. Now, what we're going to do now with that September expiration, this is the August, we're exiting this position manually. And what we're trying to do is we're trying to enter a new long call vertical. Now, with markets at some high levels, right? A lot of people say, I can't invest in these stocks. They're high price stocks. I can't get in. That's not true. Okay. Now, some of you might be saying, well, James, I cannot speak with a Southern accent like that. Does that matter? Well, it'd be helpful. Okay. It'd be helpful. Okay. We're going to right click on the we're going to do the 520. Why the 520? Well, we're right at the 525. That's at the money. And we're ticking up and down below that. Okay. We're going to try to go one strike in the money. Now, 40-cent bid-ask spread, kind of on a higher price dollar stock, that's probably not abnormal. Is there like a limit of how high we would really go? Probably 50 cents, okay? We're at 35 cents as we speak. 50 cents would be maybe cardinal sin, okay, to maybe consider a spread with wider than 50 cents, okay? The biggest thing is if you get in something with a wider spread than that, it's like you're hurting yourself, okay? We're going to right-click on that 520. We're going to make this a 525.30, okay? Widening that spread out a little bit. So what is the most that we could lose? Answer, $550. Now wait, if you could lose $550 or 545-ish on a $10 spread, what's the potential? 450. And it's just kind of vacillating up and down, okay? So there's that 550-ish debit. That's what the potential loss is given the vertical. And the profit would just be the difference from the spread, $10 wide, less what you're risking. There's the profit. So if someone's getting in, let's say Meta here, what's the idea? Well, the idea is that someone thinks that maybe the price could go higher. Now, remember, now here's the deal. Sometimes you're kind of like, well, I don't like Meta. I don't use social media. It doesn't matter what you do. It doesn't matter what I do. It matters what other people are doing. Hello? Okay? I might say, I don't use social media. We're not trying to use social media. We're trying to trade the trends. Okay? Don't forget the point. Now, this stock was down here in the basement at $88. I just want to cry. And then it went all the way up to 300. Now, the average person said, but I don't use social media. Don't worry. Okay? And then it went from someone obviously else is. Okay? Keep that in mind. Went up from about 320, went all the way up to 520. Now it's $200 right there. $200. It created kind of like a plateau right around about 440 and change. And it has a wide channel. Okay? Now, some people might say, I like big, wide channels, and I cannot lie. Don't quote me on that, okay? But a technician once said, I like big, wide channels, and I cannot lie. I said, why do you like big wide channels and you cannot lie? Well, because the wider the channel, the bigger the potential price target. Ah, okay. Now, by the way, that top might be a little short. That top for some might be, say, James, I'm kind of thinking you're short. You're kind of cutting it down a little bit. It might be 540. So our thought is maybe could we be in a little continuation pattern to the upside? Now, remember, we're not trying to put on a certain quantity of trades. We're trying to put on quality trades. Now, what I'm going to do is I'm going to go back to the MACD histogram, and I want to see what this MACD histogram is showing. Now, clearly, it should be showing something like, hey, we're moving to the upside. I'm going to put, let's say, the 817.9. I just kind of want to see how strong it is. Now, what my concern is if the MACD is up at the highest level that it's been in the last year, that's concerning because we're like, man, we don't want it at the high. We like it kind of somewhere near maybe, oh, this is even more interesting. I mean, okay. The MACD has not even gone green yet. Now, could there be some upside potential? And we haven't gone green. Now, the concern would be if that MACD was, let's say, up here, and now we're thinking, well, geez, if we're already up here, I mean, how much higher can we really go? We haven't gone green on the weekly chart, okay? So the trade that we did is we went long the 520, okay? And we sold the 530. Art says, JB, you're killing me. You're funny. I try not to have any friends. If someone likes me on Facebook, I delete them, okay? This might surprise you. I'm really not a people person. Okay. I would say I'm more of like a loner. Okay. The older I get, the more I just kind of try to mind my own business. Okay. Every day is important. Just try to focus on here's the thing. Over time, you find out what works for you. And then when you do that, you try to find a hole just to be in and to run and do what you do. Okay. That doesn't mean I'm not like personable or whatever, but honestly, over time, you find out what you like to do. You realize you don't have forever and you just want to do what you do and you're fine with that. Okay. So now one thing I want to kind of make mention. So first trade we did was NVIDIA. Second trade here we did was Meta. Okay. Couple stocks that I want to just kind of keep a little eye on just briefly, okay? A stock called Dash has had a pretty big push to the upside. Don't talk about a lot, and we're talking about DoorDash, and DoorDash has kind of filled in this hole here, okay? Now, remember, we might say, well, I would never do DoorDash. Who would actually pay those service fees, whatever? I don't know if you've gone to a Chick-fil-A or a restaurant. You would be surprised about how many of those people are picking up food for other people. Now, we might be saying, well, who could be so lazy? Well, I don't think we could say things like that because we don't know the circumstance. They might have health issues. They might be working. They're paying someone to kind of pick up their food, whatever. Or they might just be filthy with cash and loaded where it doesn't matter what the service fees are for them. They're multimillionaires. Who knows? Don't be judgmental. Now, what we're going to do is in this case, okay, we're going to go to Dash, and I want to look and first see what that implied volatility is. 47 on the monthlies this Friday, and then the 20 September's dropped down to 38. Okay, the expected move, hello, up or down $12 in 38 days. $12. Dancom stocks at 128. Okay, today's option statistics. Let's pull her up, see where we're at. Now, remember, this is what the bad part is. When that VIX falls down, many stocks also fall down with it. A week ago, we were in totally different territory, where all of a sudden, where a lot of stocks had high IV percentiles, like 70 plus, now we're at 28. So it's not horrible, but I know what you're thinking. Geez, I wish I would have bought last week. Well, hey, that's why we talked about it. Now, what we're going to do in this case is we're going to come to, now remember, if you did a vertical, in a vertical, you're kind of more numb to volatility. The Vega is closer to zero, okay? But if you were selling a put by itself, well, now you're not numb volatility. You're short, okay? You're at risk of volatility going up. What's the bid-ask spread if we sold the 125s? Answer. Well, it's 10 cents wide. Open interest, 163. Not as much there. What we're going to do in the IRA is we're going to sell the 120, okay, thinking that maybe the price could stay above that strike. We're going to try to go to where there's more open interest there. We're going to sell that. And then what we're going to do is we're going to buy something out of the money. And that out of the money for us is probably going to be something like the 100. Okay. We're going to sell the 120, buy the 100. Now, wait, when you do that, sell the 120, buy the 100, what is this really like? It's a cash secured put. Okay. You widen that spread out. You're trying to actually make it where there's a defined risk. By buying the put, you got to pay something for it. It lowers the credit and tax on a commission. However, the offset of that is buying power, or how much money you have to tie up to do the trade, is significantly reduced. And there's a built-in maximum loss. We are going to do this in the IRA account. Why in the IRA account? Well, because if we were to assign those shares of stock at 120 in the margin, it would be over the amount that we could really be have a position on. If we were assigned, we'd have to sell the shares because it's over the position size limit. Okay, that's why we're doing it in the IRA. We're going to send the order. So trade number 3 is Dash. Now, other questions that you have. So trade number 1 was NVIDIA. Trade number 2 was Meta. Trade number 3 was Dash. Okay. Now, I want to also just real quick look and see any other stocks. Someone brought up financials. Okay. One of the stocks that's in financials has done a pretty good job as far as getting above kind of this fall down level was really Goldman Sachs. Okay. Now, remember I kind of said sometimes it's hard to get in some of these stocks that fall down and they come back up and then we're nervous to get in. Well, what we see right now in Goldman Sachs is we see 2 red candles. The 2 red candles, though, are really above their moving averages still. If we went back to, let's say, where the high was, that high is right at 492 and change. Could we set the order to trigger if it were to get at or above that price? And I'm going to tell you right now, for those of you that kind of struggle to ride trend, struggle to ride momentum, we can almost pinpoint the problem. You do not set up buy stop orders or conditional orders. So what we're going to do on finish here is we're going to go to Goldman Sachs, and what we're going to do in this case is we're going to do a long call vertical on Goldman Sachs, but we're going to trigger the entry. Then it has to get above a certain price. We're going to do the 485, 490. Now, if we kind of close this up so we can see this and look at the table, the 485, we're slightly in the money, okay? And then we're selling the strike above on the call side. Now, remember, if you do long call vertical, you're trying to play more profitability and not as much probability as a short put vertical. I'm going to show you the chart now, okay? So if we went back to this, and this is your homework assignment, okay? If you struggle with momentum-based trading, you struggle trading trend, you got to practice buy stops and conditional orders. I need 5 of them. You need 5 of them, okay? The biggest thing is you cannot always be there to just react, okay? So James, this brings up a question. How do you stay on top of the market, okay? I mean, I have, obviously, like you, I have a cell phone, and that cell phone sends alerts to my watch, okay? So if I'm out and about or whatever, or just tied up, meeting, whatever it is, doing something, I get a lot of alerts just on my watch, okay? I'm not sitting there watching every minute of the market. So use technology, okay? Now, what we're going to do in this case is we're going to go over where it says limit to a market, day to a GTC. We're going to go over here to the gear. Now, what we're saying is, look, do not get in until we get above this price. I'm going to even put that exact price level, symbol, Goldman Sachs. Don't even have to type anything, okay? Method. It automatically comes up, mark, greater or equal to. And what we're going to do is we're going to put in that 492, okay? 492.29, okay? So what we're saying in this case is, look, don't do anything until we start making a tall hold, which means trade above the high of the low day, or call hold, close above the high of the low day, okay? Depends where we are in the day. Are we in the day or are we closing there? Now what you're going to see is, hey, this is triggering to enter, but the price of Goldman Sachs would need to get at or above 492.29. Now, if you get confused on this greater or equal to, don't worry. You can also read it down there. Trade number 4. We're going to save. Now, we want to make sure that when we type that number in, it better be right there. It is. Okay? Save the order, confirm, and send. Now, we're going to do this in the margin account again, try to get that capital to work there. And now what you're going to see is there's the potential maximum profit and the maximum loss. Now, the comment from Josh is, do you ever use GTC and today? Okay. If we go back and take a look at this, something else I just want you to kind of keep an eye on, okay? If this market is really going to kind of have some teeth and take that next level, we want the S&P to get about 5,400. If we can close above 5,400, this is more material here because now we're getting above these gap down levels. Remember, if we were also to see the NASDAQ close above that 1875, there might be a whole lot of people that are fearful of the market, but other people ain't fearful as much as the person that might be saying that. And remember what we said, the best friend of a bullish investor is that volatility drops lower and lower. We said a couple days ago, we want the VIX to get smashed, poke the balloon, right? We want the VIX to get smashed and drop down below 27. And so far, after we fell below 27, there's been red candles, which is the investor's best friend if you're a bull, okay? So I'm out of my time here today. And remember what we discussed. It was done for example, illustrative purposes only. Remember that coming up next, we got Barbara Armstrong doing a class on getting started with options, so stay tuned for that. And also, if you have not realized that we do have a playlist for our class, there's the playlist. And if you said, James, how do I find, and I had someone reach out to me and said, hey, I've not been with you for 2 years. I was like, where the heck have you been? Okay. Someone reached out on X and said, hey, I used to follow you 2 years ago and now I'm coming back. I'm like, okay, say sorry. Okay. Just joking. The biggest actually thing is, got a YouTube page, Trader Talks from Schwab Coaching. Make sure that you bookmark each, and we're on every day, okay? So thanks for having a little fun with us today. We did 4 sample trades, and we'll continue to watch and see if those actually fill on the Goldman Sachs. The other ones should have filled. Remember, with what we talked about here today, it was done for example, illustrative purposes only. This is the class on using options as a stock investor. Stay tuned for Barbara coming up next. Take care. Bye-bye.